Jensen CEO is not sold as well. So he's definitely, intently focused on shareholder value, and he's not distracted with anything else besides Nvidia, great product, and really kind of marketing the company.
It's only worth 900 billion.
Only 9.
It's $1 trillion this morning, right? On Tuesday morning.
990. Yeah.
Oh, okay.
Yeah.
Alexandra, what's your thoughts? And
It's $1 trillion.
should Elon be focusing on shareholder value?
Oh, we can't micromanage Elon. I mean, if we want to be in Tesla and want to sleep, we better give up on that idea straight away. So the first thing I wanted to answer was your first question to Xander. Is this a stock movement to the 200s that's solid, or can we still expect some volatility? Please expect volatility.
The company and the product. Don't look at the quarterly stock movement.
As a trader, I got to take some off the table and wait for a better price.
A very realistic bull, questioning certain decisions.
The rational bull. We enjoy listening to bears.
Looking for the red flags. You're supposed to react.
All right, welcome everybody to CyberBulls. So we've got a panel with us today who are all very savvy investors with different investing philosophies and experts not just in Tesla, but also other innovative companies. So today we'll be discussing the dramatic jump in Nvidia stock, the overall market rush to AI companies, and we'll be asking the questions, what can Elon do to make Tesla be seen as an AI company? Are we there? Are there things that Elon could do to change the narrative about Tesla for the better and continue the momentum of the stock's rise? So welcome everybody. Welcome Alexandra, Jeff, and Xander. How are you guys all doing?
Fine. And you, Herbert?
Great.
Very well.
All right. Well, the stock has been rising the last 2 weeks. Xander, just give us a sense of your thinking. Is it something that the narrative has changed for good? Is it some sort of structural change, or is it just something that could just be, fleeting? This week is up, next week will be down.
Yeah, I said a couple of weeks ago, I felt like the stock has made a move in the right direction, and Twitter does have a little bit of something to do with it. But the company's been repriced as a car company, so I think as this AI talk continues, that has an impact on Tesla, since they are definitely the leader in all of those.
Okay, well, let's get started with Nvidia. That's the big topic of the day. So one of the things that we were all salivating on was last week we saw this, right? We saw Nvidia jump first by 25%, and then even today, this week, we saw it jump another 3% going up. So this rise is because of this guidance they gave for the next quarter. That's really, all the companies out there buying their chips and wanting the Nvidia magic, because AI is the thing. So Jeff, why don't you tell us a bit of what's happening here, and we'll then talk about what can Tesla do to get something like this happening.
Yeah, I mean, if you look at the history of Nvidia, this was a stock maybe 5 or 6 years ago, 7 years ago, mid 2015, it was probably $20 or $30 a share, split adjusted, to where it is today. So it's definitely made a meteoric rise, and I think over its lifetime, it's up considerably. I think the last there was a 10x. 100x in the last 10 years. So it's grown kind of alongside Tesla, maybe a little bit more if you just carve out the last decade. It's made its rise. So it first started, it was kind of on gaming, and then it kind of moved over to crypto, and then it moved over to kind of being a data center play. And along the way, it's had its peaks and valleys as it's been making this rise. And I think with last year, you could have got this stock somewhere between, I think late last year in Q4, somewhere between 150 and 200, and now today it closed over 400, and now the new thing, right? So gaming, crypto, data center, now AI and AI data centers, and then AI, basically the conversion of the CPU to a GPU, and then using the GPU for all of these tasks in the AI landscape. So it's basically the hardware for AI, and it's really hard to actually say that there's a direct competitor. AMD kind of got lumped in. Advanced Micro Devices, great company, great leadership, also is risen significantly over the last decade. Good solid company, but I'm not clear they have any AI offerings that are even close to what Nvidia is doing. And then so they had their earnings a couple weeks ago, and I was thinking about 10 days ago, and they beat top and bottom line pretty decently, but what really caused the stock to rise, 20-25% right post earnings was they guided for the current quarter to come in at basically 1.5 times the revenue that they had given previous guidance for. And I found that to be quite interesting, just knowing the silicon like landscape and knowing the lead times for these components. I mean, there's some knowable. I mean, they had an order book that had probably for Q2 that had been filling up since late last year. If you think about it, if you think about the lead times for these parts, and definitely was probably taking shape in full shape in January, February. So I think they knew a lot. I think they watched their stock melt up with the rest of the Nasdaq, throughout this year. And remember, everybody was kind of off sides with the Nasdaq coming into the year because everybody's like, it's going to be cyclicals, it's going to be industrials, tech is still, going to continue to get pounded. And the exact opposite happened. Nvidia, melted up. The AI, obviously ChatGPT end of last year melted up alongside of that. Then they had their earnings. They, again, like I said, they knew about this order book. I mean, we're 7 weeks into the quarter, and they had this order book many months ago. So that's where we are today. And then right after earnings, ton of re-ratings on the stock, 400, 450, $500 price targets from many of the leading agencies. So a lot of places were caught off guard. So that's kind of the where it stands today.
Why don't you tell us what what you were saying in our group chat? Were you thinking that the CEO was doing some things that was pretty brilliant, and that you wish Elon was going to do the same thing?
Well, I mean, um, I he's definitely, I think he's really working the shareholder value angle, like, intently. First off, they're doing the real work. Like, NVIDIA is a great company. They have great technology. They're sold in across multiple categories: auto, data center, gaming, PC, you name it. Like they have wide breadth and it's continuing to grow. Medical, I mean, it's continuing to grow wider. So they're a great company, bar none. The CEO, Jensen Huang, is a great leader, like bar none. You really can't take anything away from him. I mean, but he's, definitely he's original, founder, kind of OG of the company, since I think the 90s, right? And he's been I think the whole sequence of events as I kind of described, I mean, this whole thing, this whole beat and raise, this what they had to have known this information for many weeks, if not months. Again, because if you're 7 weeks into the quarter giving your earnings guidance for the next quarter, you're 7 weeks into the quarter on silicon that has 16 to 20, 4 week lead time minimum. And so that means those orders have been coming in, you know, basically since January. So I think they had a really good idea of where they were going to be last week, months ago, but he kind of let the AI, let the Chat GPT thing, let that all that kind of levitate the stock, and then instead of just coming in and giving some pre guidance like, hey, we're going to blow out the quarter while his stock was already going up, he waited till his earnings, and then he just kind of was a very additive effect of really driving the shareholder value higher. And I think there was a couple of insider sales recently in the last week. I mean, this thing has melted up. It's a $1 trillion company. Um, but one of the insider sales was from somebody who hasn't sold, I think, in 26 years. So it's not like there's a bunch of selling going on at the board, but there were a couple of sales that occurred. But Jensen CEO is not sold as well. So he's definitely intently focused on shareholder value, and he's not distracted with anything else besides Nvidia, great product, and really kind of marketing the company.
It's only worth 900 billion.
Only 900.
I think it was $1 trillion this morning, right? On Tuesday morning.
405.
990. Yeah.
Oh, okay.
Yeah.
Alexander, what's your thoughts? And
It's $1 trillion.
should Elon be focusing on shareholder value?
Oh, we can't micromanage Elon. I mean, if we want to be in Tesla and want to sleep, we better give up on that idea straight away. So the first thing I wanted to answer was your first question to Xander. Is this a stock movement to the 200s that's solid, or can we still expect some volatility? Please expect volatility. The Fed can end this party in June very quickly. If they continue hiking, we can still have some economic indicators that will actually show less of a recession fear than that people hope for, obviously not in a good way. So this, while this has been great, and since the investor day, there is certainly momentum in the Tesla stock. There can still be quite a lot of macro elements that spoil the fun. Now to Jensen and Nvidia, and also in a certain sense to AMD. Yes, Jeff is completely right. These CEOs or presidents are much more shareholder value oriented. I've said this a lot of times. For Tesla, shareholders' happiness or not happiness is not an important factor in the short term. They know that the stock will appreciate sooner or later. We've had a couple of tweets in that sense, but managing this and managing expectation of shareholders is not a priority. So while we had Elon's guidance saying, oh, the next 12 months are going to be rough, we had exactly the opposite from Nvidia. They waited for good news, they waited to have their momentum, and then only good news came up. So it's a completely different management of expectation, management of communication, management of controversial topics. So it's just Wall Street and institutional investors will understand Nvidia or AMD with much easier approaches than they will ever understand Tesla. And that's not even in the subject or whether Tesla is an AI company or not. It's just the whole approach, this whole persona of Elon, this whole way of communicating, saying instantaneously what you think or what you feel without filter. That's just not what they're used to. The good side about it is this gives us still lots of buying opportunity. Not so far ago, I think about 15, 18 months ago, Nvidia and Tesla were at the same price. Now Nvidia is at 400 and Tesla is at 200. And obviously Tesla has been at 400 at one point. So if we have time, if you're an investor who has time, who understands the business model, who can live with Elon's persona, this is much better for you to accumulate stock now than Nvidia. Nvidia is at an all-time high. I'm not sure I would get into the stock today. I mean, it's not a stock I've ever considered anyway, but I'm not sure I would get into a stock at its all-time high today. So I'm not, I wouldn't be a person that arbitrages between Nvidia and Tesla in the sense of purchasing Nvidia. Now for Tesla, rather the other way around.
Yeah, and I love Alexander's point. It's not to say that. I mean, I think there was a tweet that went out. I was just looking for it of like the top 10 companies that have appreciated, their share price over the last decade, and I think Tesla was third or fourth. And I think Elon responded with, ... for now, which I like that. I think a lot of us like that he was actually engaging, and the fact that he's not even satisfied with number 4. So if you've been a Tesla investor since IPO or over the last decade, holding a stock for decades is a pretty long time, in terms of the average hold time for a stock. But, you've done well as a Tesla investor, and Elon's done well as a CEO. The leadership team has done well. I think we're all kind of saying that. And it's just, now if you look at what Nvidia is doing, I think we're in the very early innings. I agree with Alexander. Like the stock probably has to take some bit of a breather here at some point. But in terms of like where AI is versus like where AI is going to be, and if there's not a real kind of competitor that's emerged in terms of, making these solutions, they're going to have a lot more runway. from here. Again, not stock advice, not financial advice, not tactical trading, but level ways to go from here. But you've done well as a Tesla investor, and they've done well, kind of looking at that broad like 10-year landscape. But yeah, if you start breaking it down into micro chunks, there's definitely some areas where Nvidia's kind of been heads down, and continuing to drive that shareholder value. And there's days where I've complained about the board member sales openly, and like you can never sell your stock as a member of the board. You should be able to. It's just a question of like how it's done, and and is there certain timing around it. But again, none of this is going to be perfect. None of this is going to go exactly the way we want it. If you've been an Nvidia shareholder, by the way, in 2018 you were cut in half. I think you were cut in half again last year, or certainly a huge chunk. So it's never kind of this like pretty like glorious
Easy
ride the whole way. You've got to deal with you've got to deal with whatever kind of situations could come about. So we'll have to see. I do like getting back to the Tesla conversation, not that we have to go off Nvidia yet, but I do like that it closed over the 200-day. We haven't closed technically over the 200-day moving average, I think, since September, which was pre-Twitter. And that was the last time. That's the 200 moving, not $200. We've closed over $200 before, between now and September. But over the 200-day moving average of the closing price of the stock, that technical indicator we've not done since September. So us cresting over the 50-day, which I think was around 178 a week or two ago, that was a big thing for Tesla. And now closing over the 200-day, again, there's no guarantees. Alexander's right. Like the Fed could come in and cause some problems. But I do like the fact that the Fed fund futures, I think, are over 60% now of a rate hike next month. Of like they've basically baked in a quarter point next month. And Tesla still technically closed over the 200-day. So I do like those two things happening together. Not trading advice, but that is a good spot. It's actually it's a spot of where technically a lot of funds and people technically, like basically Tesla's been broken technically for the last, call it 7-8 months, and for it to close above this makes it interesting for people to actually start buying more.
Yeah, I agree. I would just, if you don't mind, I just want to add one last fun fact is Nvidia was the firm that donated to OpenAI when Elon was the founder, the main chip, right, and the main infrastructure, and so I mean, people easily associate Nvidia with AI just as the hardware company for it. So the one thing that I think we all still have to strive, and each of us should bring that forward, is make people understand that actually AI, it's good to have the hardware, but it's obviously much more important to have the software. And who is the best for that, right? And that is, and I just have the feeling there's no understanding whatsoever on that point yet, just because people don't grasp the size of this market, the complexity of this market, the possibilities of what's coming.
Okay, so I want to ask Xander about the moving day average stock that Jeff was talking about, but then I want to come back and talk about Kathy Wood and her comments about Tesla and Nvidia right after we hear what Xander's thinking.
Thanks, Herbert. So I was just looking at the PEs of both Tesla and Nvidia. So interestingly, so Tesla's currently at 58.46 for the forward guidance, and then for the trailing 12 months, it's at 59.22. But Nvidia, it's like they caught up on the forward guidance, and that's at 54.72. But their trailing 12 months is 208.46. So that's that's rich. So my question is Tesla future products, and if you're going to look any further out than the next quarter, where's the value going to come from? So that was, and then Jeff was talking about what Nvidia was worth recently, and you could double. They were actually 52-week lows 108, so they've nearly quadrupled in their value in the last year. So it's a lot.
It's a lot, but it's wonderful. Did you guys see Kathy Wood
It is.
had a tweet out? So first of all, she bought Nvidia and then she sold it prior to the actual run up. And of course, you can give us that update, Alexandra. But then she sent out a tweet saying that she believes Nvidia is overpriced and that it's actually Tesla that is well positioned as the greatest AI company. I don't know what word she used, but that it's worthwhile as an AI company. Of course, I'm biased. I think that that's true as well. Tesla's story as an AI company is yet to come. I'd rather be investing in a company that's about to be told that story versus one that's already kind of took the jump. What were you guys thinking when you heard that?
You're muted.
Can't hear you, Alexandra. Mute.
That there I am. Sorry about that. I actually think she's right on that today, but she was obviously wrong selling much too early. She's very good spin doctor in then just moving on to the next subject, which is how overvalued she thinks it is today. ARK has done some really big mistakes, really big mistakes. Besides Tesla, on which they were right very early, which is their story, and which they were right up till 2021. There are lots of companies they just got completely wrong, including Palantir, including Nvidia. And at the same time, they're clinging to stocks like Roku and Zoom and stocking these ones up and Unipath. And I mean, a couple of it, they're in there. Just, you wonder, and they're in all funds. So the criticism she deserves, she really deserves that criticism on Nvidia, because they got it completely wrong. Their analysis of the stock was wrong at different moments, not only the last move 6 months ago. And but granted, I mean, mistakes happen. And then today, attack is the best defense, right? That's just her motto, and she's good at that. She rather has now titles saying Kathy Wood says Nvidia is overvalued than titles saying Kathy Wood sold much too early 6 months ago, right? That's just the way PR works. But I completely agree with you on the fundamental analysis. As I said earlier, for me, playing Nvidia now for the next 6 months, I don't see it. I mean, maybe it is going up with the general market, but I just don't see the same potential that I see today clearly in Tesla once we get this AI story communicated.
Yeah, that's the key. I think that should be kind of a key center point. And I tweeted about this, and Elon responded to it as well. As there was a grouping of AI companies that CNBC was talking about, and talking about their valuations, their forward valuations. They didn't even include Tesla in the conversation. And the question you have to ask yourself is, how much of this is Tesla's accountability to articulate that vision in a way that is consumable for the fintech and the standard kind of investor community? I think there's many layers and types of investors, right? You start at the Tesla Twitter community, and there's a technical portion of the Tesla Twitter community that really understands this and really gets it. And of course, it's obvious that Tesla is a great AI company. This is where they're using AI, and it's wonderful. I mean, I even talked about where they're using it in manufacturing, which is totally not talked about. But you're talking about 0.00% of the population that would know something like that. And then as you get further away from that sphere of understanding and you get out of the Tesla Twitter bubble, I don't think anybody really understands that Tesla uses AI to drive the car, and it can drive the car by itself via AI. And the fact that they're going to use that code base to build, billions of robots, and they're using that code base in other areas. And so that is so you could blame fintech, you could blame CNBC and Fox Business and everybody, like they all get it wrong, they don't get it. And you know what, they do miss a lot of stuff, like I just described earlier. They thought tech was going to get routed in the first half and it didn't. But you have to put that onus on the company as well to clearly articulate that vision and why that their AI investment dollars have turned to this amount of ROI today, and it will be this amount of ROI in the future, and be able to explain it in a believable way that has credibility
and motivating. And that's exactly my point. When we have an AI day, and we now had 2, and they were clearly labeled, this is a recruitment event, right? And I mean, I am no specialist of AI, but I understood zero, right? I was listening to it. I was impressed that I couldn't understand anything, but I really don't believe, that I am the lower IQ person listening to Tesla, because I'm so motivated and wanting to understand it, right? So the fact that their whole communication is always only goal driven, which is, I think that's actually exactly what it is, because that's also why advertising never got any traction so far. With Tesla, it's always goal driven, right? You're from point A, you want to get to a point B, there's a goal, let's do for this goal. What they don't understand is the recruitment event is also an investor event. The recruitment event is also a stockholder event. The recruitment is also an informational event. And there is no willingness to address these other markets, because that is not the goal they're after that very day. And I mean, I'm not even criticizing it, because I'm starting to get used to it. But the side effect of that is that you are not addressing with the cars the total addressable market of more commoners, what I will call this, meaning people who haven't gone into the EV sphere yet, or you're not addressing with AI the people that are actually interested in bots and AI and vision AI and all these things, just because you don't speak the simple enough language to reach these people and then motivate them to get further into it. So it is what it is. I don't think Tesla will change. I don't think this will become more accessible to the normal people among us. But it is, the result is that today, Wall Street analysts, whoever, just don't get, when we are talking, and Cathy Wood, when we're all talking about, no, the real AI company is Tesla, they look at us and say, no, it's a car company, right? They don't even get yet that it's an energy company and that's a commodity company and that there's so much more to it. But for them to understand that this is really AI, and this is AI at a much higher and much more complicated level than anything else. It's not just language, it's not just words typed. This is vision, reactions, and so many other things. And nobody understands it.
Well, I think it's all about to change. I'm feeling very confident it's about to change, and that there is a willingness, because you heard Elon say, I'm going to stay at Tesla and I'm going to make sure that I shepherd through Tesla's role in helping with AI and AGI. So you're going to start seeing Elon talking about it every time he's interviewed, every time that he does tweets. He's going to keep talking about that Tesla is an AI company, number one. 2, we're seeing the movement of FSD now, right? We're now at the point where it's wide release at this point. The release is now wide release. Anybody who wants FSD beta can get it now with this click of a button. And there's now news that there's FSD in 2 vehicles in Australia and 2 vehicles in Europe. Probably just employee vehicles, but it's now getting moved there. There was a regulatory body in Europe that fast forwarded the time that they're going to approve FSD in Europe to now be January 2024, number one. And so FSD is about to get much more, just if all I want is Elon just needs to say these things and communicate them. And that's enough. We don't need some sort of, the company needs to have events and so forth. And the other thing that I think is going to happen is the bot. In the last shareholder meeting, we saw this amazing video of the 5 bots doing their thing and all the new improved features and capability. Every month now, they could release a video of the bot doing more and more things every month. And because it's already at the point where it can do so many things at this point. And so that's going to just generate more knowledge. I think Elon's going to do a push. He's going to do a push to make sure that Tesla's seen as an AI company. And at that interview that he was at CNBC, he said, this is not the time for me to make announcements. But, right, he talked about the fact that X.com, Truth GPT, Twitter, and Tesla, there are going to be an announcement of how the three of them are going to work together to really build AI. So I think it's coming. I think that we're you can see that he really is wanting to make sure the world knows that Tesla is the farthest away, just so far ahead of everyone else. And all it takes is for him to keep talking about it and to keep educating people and to keep, these videos and this information, both FSD and the bot, could be enough to just get everybody to be aware, we're a real deal.
Okay, let's hope you're right.
I will be.
I feel like he's got PTWSD, like with Wall Street doing their things that they did, he's being extra cautious on the forward guidance and talking about this 12 months of pain. But at the end of the meeting, when he just said you guys are the OGs that truly believe in the company, it feels like he's not trying to pump the stock at all. He's just putting the head down and wants to just work, and and then Wall Street will reward it later. But for now, it's really a good opportunity in my mind to just continue to make some new money and deploy some more and grow the position.
All right. What do you guys think? Any last comments about Nvidia? You guys were a little jealous last week, and now you're a little muted in your conversations here. But don't you guys think Tesla's?
I don't think we were jealous. I mean, the one thing we decided is that we also tell people what other positions we have, right? I mean, me, I'm 95% in Tesla. And I do have a little bit of a trading position in a stock called ASTS, which is a satellite provider for mobile phones. And I think Jeff and Xander want to talk about, some other ideas. And I think it is important that, we give some ideas that we have to our audience as well.
Yeah, I own other positions as well. I do definitely have a majority in Tesla, and I believe in the mission going forward. And I do agree with you, Herbert, that over time that this will come out. I just think it's critical. I think that's why I've been tweeting about it. I think it's a critical portion of the story that the leadership needs to get out there. And I think when I was tweeting about Nvidia and AMD, first off, I mean, to be honest with you, I like AMD. I've invested in it before. I've done great with it. I'm not in it now. Nvidia, I've invested many times over many years, owned it, traded it, did well, don't have it. I've also been a part of Nvidia when it cut in half and had to, I had to wait that out. So I've kind of seen all the cycles of these companies, but yeah, I was a little bit, I don't know if the term is, I'm not jealous of it. I've had it, I've experienced it. It's more of, and in AMD's quite frankly been higher than it was where it is here, but it's had a nice run up. I don't understand the AMD run up. Their earnings are not good. The growth is not good. They don't have a real AI product shipping that's meaningful or in meaningful volumes. And they don't have anywhere of the breadth of AI silicon and services and software that Nvidia has. But it's been basically taking on this Nvidia pin action most of the time. I think today it was a little bit of a different story. So I think these stocks are going to, have a little bit of a tiring point. Just technically, RSIs are up in the 80s. When it's done this before, these are the points in time where they get a little bit of a tired. Like I said, I'm not saying this is the end. It's not going to be any higher anytime soon. But yeah, they both had appreciable run up. And I would just say, what I was commenting on is, there was no drama around those stocks. And again, I think Alexander explained it well. When you invest in Tesla, you have to invest for kind of all of it and for everything that you're getting and dealing with. But I was commenting on the lack of drama around Nvidia. I think the biggest drama around Nvidia is when Jensen grew his hair out during the pandemic, and he had that long, white flowing hair. I think, kind of, reminded me of like Back to the Future vibes. Like, that was Nvidia's crisis probably, and calamity.
And we all think Herbert, and we all think Herbert should grow his hair out, right? We all agree.
100%.
Not gonna happen.
100%.
But okay. I'm so happy, and honestly, I look at things very positively, right? So the rush to the AI companies and them getting their due market cap growth, I do think it is. There's definitely many companies that are just lopping on the AI label and they're not worth it, but many of these companies, it truly is worth it. This is a major step change. This is bigger than the internet. This is bigger than mobile phones, and we are at that moment that AI is revolutionizing industries and making definitive changes. And so this is not the dot-com bubble that happened and you got a bunch of companies that got invested in and it was too early and they all fell. This is the right timing. And so when AI companies are rewarded with this multiple, I am so excited because Tesla, if you believe, and I do, but if you believe what Elon's saying, and if you look at Tesla, do you believe that they have a large supercomputer, Dojo, that is going to be competitive, even if they just use it internally, and that they have real world AI? And he used the term, right, that you know, in his perspective, you'd need a telescope to see who is second in being able to do real world AI. And if you understand the difference between real world AI, if that is in many ways, people are thinking, and you know, the experts, not the general public yet, the investors have not caught on to this, that real world AI is actually the more valuable AI capability. And then if you believe what Elon is saying, and that's what the experts I've been talking to and interviewing as many people as I can, is that ChatGPT and all of these generative AI companies that are able to generate images or generate responses and communicate with you, the large language model, are they able to get to real world AI before real world AI at Tesla can get into ChatGPT? And according to Elon, right, he's going to make a huge push on this. He's investing heavily. Just news came out very recently that that Tesla locked up the spare data center space that Oracle has. He locked it up. And so now it's becoming known, and all the work, you know, everybody's scrambling to try to get data center space and, you know, chip capabilities, and they spent that. So they're investing heavily into this. Now people are saying, well, he's behind. They have to catch up. But if you believe that, in fact, they might be behind in ChatGPT, but it's going to be easier for Tesla to get to ChatGPT than ChatGPT to be able to do real world AI, and then the combination of both is what's more powerful. So the story for Tesla is just getting started. And if the multiples are being given to companies with AI, Tesla just needs to communicate that they've got this, which they already have. They just need to communicate it and make people understand what it is that we've actually got in our hands. The narrative's going to change, and it can happen very quickly. He's already talked about that he believes Tesla's going to have a ChatGPT moment. The ChatGPT moment is a 1 month period. Within that 1 month, the world and all the investors understood what the capabilities are. And that's what's going to happen for Tesla, just in that 1 month, sometime this year.
Yeah, and I want to add to that actually macro does us a favor. And I know everybody is going to say, oh my God, macro has been tough with us. Yes, it has. It has been tough with us in 2022 and beginning of 2023. But the result is that those multiples are really down. And that is exactly the opposite of what happened in the bubble of the internet and in subsequent bubbles. We're currently at valuations that are more than reasonable. Once AI is understood, as it's today understood for Nvidia, but not for Tesla yet, these multiples are going to rise, and we're going from low levels. So this is comparable. I saw these charts. I'm sure lots of us have seen them, comparing the stock market curves of 83 to now, and it is very comparable. Other that we're in a much better situation now than anybody was in 83, right? 83 was the beginning of the IBMs. And I mean, some of you are not old enough to remember, but this has nothing to do. We're today on a starting block that is much stronger and much higher, with a much higher potential. So this is really a moment I would not like to be in cash or in bond. This is a moment where you have to position yourself to be in the right stock and be patient for a couple of months. I don't even think it's going to be short years.
I want to ask Xander this question, but tell me if I'm right or wrong here, okay? Everybody knows that Tesla is a car company today. And in fact, the best and well ahead of everyone else, and it's got a huge, market opening for the revolution EVs. And then everybody said that, oh, in the future, Tesla will be seen as an energy company, will be seen as a bot company, and eventually will be seen as an AI company in the future. But don't you guys feel like because of what's happened recently, that all of that has come fast forward to even like now? It's going to happen this year, 2 years from now, not 5, 10 years from now. The whole point about this realization by the world that these AI companies are real and they're throwing money at this, that's great news for Tesla, because now it accelerates when Tesla will become and be seen as an AI company. Instead of years from now, it can happen shortly. And now we're seeing energy really ramping up shortly. And now we're seeing the bot doing things that people didn't think was even possible. There's people that said, oh no, it's going to take them years before it can do bipedal walking because that is so difficult to do. It's doing this now. And now we're watching to see the conversion of AI into physical form. So, what's your thoughts on this, Xander, as a long-term investor in Tesla? And when you first decided to go all in Tesla, I'm sure you didn't even think about robots, AI, and energy, or did you?
Energy was definitely in the equation. The robots piece did happen faster than the market expected. So I find it interesting that like Apple is nearing its all-time high. It's at like 177.30 right now, and I think it looks like it's like 181 is the high. I didn't look when it was, but so like the market, I wasn't expecting this Nvidia move because I thought we were all still waiting for the Fed to make a decision on rates. So and we're still quantitative tightening. So I have like all these questions where so the market's just waiting to explode? Is that where we're at? There's a lot of cash on the sideline. So back to your question, I thought it was very it's a great opportunity for Tesla investors or people that look really far off, that the value hasn't been given to Tesla for what it really is. You started the sentence with Tesla as a car company, and I never viewed it as that. I just think it has so many verticals that and so many ways to generate cash that looking forward, I think that addressable market is so much bigger than Nvidia can handle. So and it's worth more than Tesla now. So.
Yeah, I think one of the big secret sauce that gets missed a lot with Tesla is the design engineering vertical integration of their solutions. Like they for the hardware computer, the hardware 2, 3, 4 designed in the car. Let's talk about hardware 3 and 4. That is Tesla designed silicon. Like that, they designed that and they released that design to Samsung or a TSMC, whomever, to fabricate the chip and ship it back. That's not a Samsung or TSMC design. That is a Tesla designed chip. That is the hardware computer for full self-driving in the car. And there isn't another auto OEM that's making that designed their own hardware chip. So when you can go from that portion of the stack all the way to the user experience and the integration of the car, there's no one company that's actually doing that. Everyone else is buying chips from an Nvidia or buying chips from someone else, but mainly Nvidia. And then they're working with Nvidia on the integration. But now you have these two separate companies that are doing this integration, and it's never perfect when they're doing that. And you don't know, if you're Nvidia, you don't know how much, Li Auto is, I'm just making that up. What kind of priority is that? Do they have the best engineers on it? Or are you putting all this effort in Nvidia and they don't have good enough engineers to do the integration, or with whatever company? And Tesla's doing this all vertically integrated as one company. So when Tesla stepped into the silicon realm and said, look, what we're getting from Nvidia or others, Nvidia's a great company, and Elon's openly been very complimentary of them, but it wasn't enough for where they see it going. And Tesla has a full self-driving solution that's actually affordable, that can be scaled in the millions, where these other companies right now have all these sensors, have very expensive compute power in the car, high current drain. That's why you don't see many of these as actually being EVs. You look at the cruise vehicle, you look at some of these other vehicles, the minivans and so forth, they're not EVs, they're gas powered. So to me, they're much farther ahead than they're actually getting credit for from the fintech, meaning from external. They have a vertically integrated solution that they know end to end, that they've been able to optimize power consumption, and they've been able to get the cost structure, the COGS, to a point where they can actually scale it and ship it in the car. And if the customer decides to turn it on or not, they still have something that they can make industry leading gross margins on, whether they turn the software feature on or not. And that's ahead of everybody.
Okay, lovely. So why don't we talk about the shareholder meeting that happened a couple of weeks ago? Alexandra, you had a tweet where you shared the shareholder results prove that the support for the board is quite solid. Go ahead and explain this.
Okay, so part of the elections this year were 3 renewals. I mean, 2 were renewal and 1 was a new appointment to Tesla's board. So the renewal were Elon and Robin Denholm, and the new appointee was GB Straubel. And in my chart, I don't know whether you can show the chart by itself because it explains it quite well. Thank you. Wow, gosh, we've got the best producer, Herbert. You see in different colors the results for both positions over the last 4 years. So it starts on the bottom in 2020. Robin Denholm she was still chair. She became chair in 2018, was up for re-election, and the votes against her being a board member were 19%. That's that blue bar on the bottom. In 2021, there were 2 board members up for re-election, James Murdoch and Kimball, and those against were 20 and 30%. So the negatives started to grow, but the negatives were highest in 2022 when Ira Ehrenpreis, who is the responsible party for Elon's stock option package, and Kathleen Wilson-Thompson, who is more on the HR side of the board, had negatives of 32 and 36. Now, do all remember 2022 was not a year that was, that was in August. So the Twitter thing was still pending. Would it go through or not? So this was not yet the controversial period that we have known a couple of months later. Yet there was significant stress on those votes. And then you see in yellow in the top 3 lines, the votes against these 3 nominations, with 25% against Robin and 14% against GB Straubel and 5% against Elon Musk. Now, the first thing I have to say is, who are these 5% against Elon Musk? I mean, obviously, we can speculate about Leo Kogan, who was very vocal about Elon. Exactly, but I mean, short sellers usually don't have voting rights, right? That's but let whoever they're 5% in it. But the sense of my message was that while we had a negative that was increasing, clearly this year there was, despite all the noise and all these people screaming about the board, and the board is not managing Elon, and Elon should do this and Elon should do that, when we had to vote for it, it was clearly much more positive than anything that could have been anticipated. The one thing that I also think that happened is we saw Robin Denholm in a video a couple of days prior to the shareholder meeting that she put out deliberately, because I don't think she's a woman who likes all this attention and videos and going out and putting herself outside there, but a very well prepared speech where she explained that the board has been working with institutional investors. And I think that's exactly what happened. I think they've been working with big funds, with the big groups that put money into Tesla and want to stay in there for quite a while, and who have voting power. And I think that showed in those results, because I don't have the feeling that there was a massive coalition against these results. And all these proxy advisors, remember I was telling you for a couple of months how these shareholder meetings are always steered by these proxy advisory firms. There are 5-6 out there that are very anti-Tesla. And they usually have a good influence on the Vanguards and BlackRocks and State Streets of this world. Well, this year, None of that worked, right? So the Tesla strategy of these lawyers of putting the shareholder meeting as early as May, of Robin Denholm and the rest of the board working with these institutional investors clearly worked, and shows to me that this board is maturing, is knowing now how Wall Street operates, is catering to it in a certain way, and that gives us individual retail shareholders actually a lot of comfort.
Nice. So the support for Tesla is still very strong. Support for Elon is still very strong. This is now coming off a very, very difficult 2022. What do you guys think? I mean, am I getting ahead of myself thinking that we finally gone past the really negative, the really bottom of the bottom of what happened because of just so many things that happened with the Twitter situation?
Sure.
Volume versus
come
volume.
On. January we're $100, right? We're now on Tuesday we're above 200, and of course this was hard, but we're seeing the light of the tunnel, that's for sure.
And the comment about Apple being back to near all-time high in Nvidia, well, these guys do not do the high auto market, and so this one I don't think that Tesla needs to necessarily catch up, but if the people are feeling confident about the future again, there's really no reason at this point, as far as I can see, all the negatives about Tesla has been addressed, and Elon is now back fully on the board on managing Tesla. And here, let's just share this screen. Obviously, Elon is right now in China meeting with the foreign minister, and he also met with the cattle CEO, Robin Zhang. So. I mean, it's like things like this, when he does these things, there's no one on earth that can do a better job partnering with the, top leaders of countries, top leaders of major corporations, striking deals with Ford. People want to work with Elon Musk. He is critical. I was saying that even if he just has 10% of his time, I'm happy, because the man can move the world, and no one else can do these kinds of deals as much as he can.
I don't know if I agree with that, but 10% of his, he's trying to grow Tesla to 10x its volume today. So he needs to, there's portfolio decisions, there's technology decisions, there's access to new markets. There's a lot of things that need to happen. But I will agree with you, is his whatever percent of time he's had at Tesla, because he'd admittedly said, like, Twitter, took a lot of my time to get it, stabilized. But his small percentage of time at Tesla, he's, with his leadership team, has put together a strategy and vision, that was spelled out at Investor Day. That's, to me, far and exceeds any other auto company. But I think, to answer your question, or to add, was just why is it responding? I think the analyst investors are responding to Elon recommitting to Tesla, publicly recommitting his time to Tesla, and actually saying, with hiring this talented CEO, incoming CEO for Twitter, I'm going to have more time. And where is he going to spend that time? It's not going to be, working on the food and like CEO type stuff, like, administrative tasks. No, he wants to be elbow deep in, getting his company to be viewed and developing those AI solutions to actually get them out in the market at scale. And I think that's what, and if you're investing in Tesla, that's what you need to be really excited about, is that he is shifting his time to really seize the potential and the opportunity with AI. And that's where he is going to spend his time doing. And so, and he's obviously committed to the mission of Tesla and accelerating sustainable transport. And you saw a much broader vision in Investor Day. So that's what, I think that's what the market's reacting to. And I think these technical indicators are also responding to it. So there's less things to kind of like what's going to get Tesla. Now, the other thing that's out there is what's happening with gross margins. Is this quarter the true kind of bottom or trough in gross margins? And I will tell you, there may be more, surprises, again, tactically short term. But I think the COGS reduction that's occurring is probably being highly, highly underestimated. We will see. I have no inside information. I don't know. I just know what's going on commodity wise, and I just understand and see the program that Tesla is doing from an event driven cost reduction perspective. And I think they're just going to move faster than other companies do to drive COGS reduction. So, hopefully this quarter is the bottom, but I do believe, I think they're going to surprise, in the future and continue to grow those margins and kind of put them up into the right again.
Yeah, I agree with you, Jeff. I do believe in the short term we can still have a little bit of pain. I mean, do also remember Elon will tweet, and politics the next 15, 18 months will be dominated by the US elections, which will actually happen on Twitter. All this discussion, Twitter is going to be the main sphere of it, and he's going to shoot himself in the foot as he does like nobody else. So there will be some stuff, but does that really alter my medium-term outlook for Tesla? Not at all. I'm actually more euphoric on Tesla for the next 2 to 10 years than I've ever been. Do I still believe that the next 6 months can be painful? Yes, I still do believe so. I still think that July may bring, when we see the financials for the second quarter, I mean, I do believe the numbers of deliveries are actually better than I worried, 450 plus. But auto gross margin can be anywhere between 15 and 20%, and if it's 15, it will be painful. The Fed, I said earlier, can still come with some stupid surprises. So the very short term, and nobody should be in a stock for the very short term. If you need your money in 3 to 6 months, don't go in any stock, and certainly not in Tesla. If you have 1, 2, 3, 5, 10 years ahead of you, you're in the right stock.
How about you, Xander? How are you feeling about the near term and the new long term?
I'm like I started saying, I'm optimistic now. I think the bottom to me is in Tesla. I don't think we're gonna revisit 150s. Hopefully, so I'm really excited about. I showed the bot to my dad yesterday, and he instantly said, "Yeah, I showed the video." And he goes, "Oh well, Boston Dynamics," like instantly. That's the first comment, and my response was like, the hardware is actually the easy part, and we've been doing that a long time, right? These things can flip, but who has the software to make this thing a useful item in someone's home or in a factory or in a business? So that's to see their progress and their rapid progress. It's incredible. So I think once that story gets out to the next batch of investors as we go into the bullish market, I think that's where we're going to be rewarded for being long-term shareholders.
Yeah, I mean, so what if there's Boston Dynamics? Let's say they are able to do this at scale. Let's say they can do it for less than $100,000. Doesn't matter. The market for bots is so big. It's so massive. What matters is, can Tesla create bots? Can they do it at scale? Can they sell this? Can they use it internally? And the savings on their own margins will be pretty impactful. Good. So I think we're all feeling better, which is interesting because literally a month ago, a bunch of people were very, very concerned about the stock. The world was ending, and it can turn. Now, like you guys were saying, it can turn back to where we were. So we're not, nothing's ever home free. But every month that goes by, every quarter that goes by, Tesla's just getting stronger financially. They're getting stronger in their market share. They're able to build more factories. And so, while we can keep saying, yes, it can go back to 100, but it's also a different company, 6 months from now. They've got progress in energy, in their AI, in bots, like we're saying, and everything they're doing.
And we agree, and we know much more about the company. I think one of the things we already may forget was Investor Day and how deep that bench was. That's really something that maybe for us retail investors not as important, but for institutional investors and for Wall Street, having seen these 16 people line up, having seen that competence having shown how they want to get the reduction on COGS and how strategic it was all playing together, right? That's something that was a puzzle piece I was missing for a very, very long time. I mean, that Investor Day video, I can put on again and again and still learn something about it. So I think there were actually quite a few things that were positive silver linings of Elon being temporarily the CEO of Twitter. It just put the focus on the second generals of Tesla. They stepped up. They showed us how good they were, and I'm very reassured, honestly, and everybody could be on what we've seen for the last couple of months, and that's what's building up for this medium-term optimism that we're having now.
Who wants to make a who wants to make a bet with me? Anybody want to do a bet with me?
Lose it again. Oh my gosh.
Let's do it, Alexandra. I will say that in the next 3 weeks, Elon will either tweet or say Tesla is an AI company. Who wants to bet?
Just a tweet, just because I mean that's going to happen because it's such a it's such a topic. Now, if he, I mean, what I would really want is that he explains it in an interview or on any platform, and not just put a tweet out, because given the subject is on the forefront of any financial discussion these days, I don't want to take the against, because that can happen just by pure coincidence, right? Yeah. But if the bet would be he is going to explain how vision AI and real world AI, the way Tesla performs it, is so much more superior, and an easy add-on will be language tools, then I take the under, because I don't think it's going to happen in 3 weeks. I hope it is, but I can take the under.
I don't know yet.
You see,
I mean, he's responding to tweets, regarding that. So, so let's see.
What is clear is he's obviously attracting or trying to make sure we all produce these AI generated images, fashion shows, whatnot, right? I'm not jumping memes on that bandwagon, but exactly memes, but there's so many others out there. And I think that has a purpose, right? Because initially I was like, okay, what's this now? Beauty show? But by doing that, I think he wants people to get very comfortable with these tools so that certain knowledge level is achieved, and then maybe he's building up on that for some other communication. I give him that, because initially I thought it was a bit ridiculous, but there we go.
Didn't he just respond to an AI meme?
Yeah.
Sorry.
Yeah, I mean, he's going to go full force. Beyond just little tweets and all that, he's going to go full force. He's got to invest. He's got to attract the smartest minds to come to Tesla and not go to DeepMind or OpenAI. He needs to quickly get out there and win this this momentum that's happening, and he's going to make moves very quickly. And that's what he said when he came up in a shareholder meeting. Okay.
How about this bet? You say in June some major announcement for Tesla, Twitter, X.com AI will be made, and I say not yet.
Yeah, I was thinking that too, but I was a little concerned because I know that he wants to rush it, but he also these things, you can't rush these things. It's going to be a big deal. They're going to talk about these 3 companies. He wants to do it quickly, but I don't know if I can say within a month.
You don't want to lose, and since you won twice, I don't want to lose again.
I'm not ready to make that bet, but I do think that I think that we're underestimating how much you were going to start hearing Tesla's an AI company. And if we are underestimating, or we're not underestimating it, I'd be very disappointed. I'd actually be upset, because, Tesla has to do this. They have to do this. But I know he knows it, and he's going to get out there and start talking about it. He's already did. He already started doing it. Every interview, he's already talking about it. So it's going to happen more and more, I think. Okay.
Well, step 1 is talking about it. Step 2 is it's got to show up in the earnings.
There you go.
Right.
What do you mean? What do you mean, Jeff? What do you mean it has to show up in earnings? It does not.
It has to show up. What do you mean? Of course it does. It has to show up meaningfully in the earnings. Of course it
It
does.
does
It
not.
has to show up in forward guidance.
Well, let me
Sure it
ask
does.
you, is OpenAI, are they making $1 billion of revenue per year today? No,
They don't
it's
have
the,
to
it's
because they're starting from a much lower base.
exactly.
Tesla's already rated a $600 billion company, so they've got to
Well,
show something in AI to be able to get some credit for
okay.
it.
It's a narrative change. And if the narrative changes, then people will start to view the company outside of just an auto company, and that should raise the PE. But I get you. There's people like you who are, saying that earnings over next year is what matters. And I'm not saying it's wrong. Of course it matters. Of course it matters. But as an investor, I think that companies can be re-rated without the earnings showing up quite yet. That's the whole point. It's how people view the company and why they get excited. Yeah.
Sure. And
Yeah.
I mean, we all know Gary's model. Gary's model is up to 2030. And I'm actually nagging him because I think that's not enough. He should do now 10 years. But I mean, if you have bot scenarios, if you have FSD scenarios, if you have AI scenarios that are up to 2033, it doesn't have to be in the PE of next year. What I want actually, while we're talking numbers, I really hope that they're soon starting to have energy much more, in detail included in the financials, because while they don't have energy yet, don't worry, we won't have much on the AI numbers yet. So they really have to step up their game on transparency of certain clusters of their income.
Yeah, speaking of financials, I wanted to bring up like the implications of including, Ford, including the chargers of Tesla, right? The NACS, or right, North American Charging Standard. Let's talk about it. What are the implications? Because obviously more charging will occur, and Tesla will get revenue on that financials. But is there royalty implications? Is Ford paying a fee for access to the network?
I mean, I think so. I think at least there should be something more than just a handshake. But I doubt that it actually happened at this stage. I think it's actually going to be more expensive for the GMs and Rivians and Lucids coming afterwards, because now that Ford has made the first step, the other ones will have to follow. There's no doubt. I think Tesla just imposed their charging socket and the Tesla superchargers to everybody else, right? This is it. I mean, I don't know what the other miserable charging companies that are out there, and I'm sorry to say so, but they are. I had a Bolt. I know exactly what I'm talking about. Are going to do to survive, because they just lost their market, and there may be still room for them at a cheaper price, less margin, whatever, but obviously it's not. So the business model could actually be triple. It could be for the automakers that want to use Tesla standard and superchargers to have a royalty into the system, a licensing fee. Then the Ford drivers and all others owners to have the choice between a monthly fee and a normal Tesla charging price, or not a monthly fee, but an increased charging price. So that's just the second model. And then the third model is obviously, everything that's around it, the app, the supplementary income, the fact that now they see the Teslas there charging quicker, because that's the other problem, that not all those cars are equipped for 250 kilowatt chargers, right? So you have the issue that certain cars can't use the Tesla chargers yet. And I mean, believe me, they will deeply regret once they learn that at the charging stations.
I find the timing to be super unique. One, now there's an IRA signed, and as these charging stations are built out, there's the government is investing in charging stations, and they know for every single installation that's put out there, the amount of kilowatt hours per versus the cost to actually install the charging station, the Tesla is the Tesla superchargers the most efficient and lowest cost charging outpost. So I find the timing to be interesting, because I think Ford came under the realization of like there's this chicken and egg of like, how am I going to scale an EV if I don't have a supercharger network? Well, to build a supercharger network, that's very capital intensive. And what's happening right now in capital markets is the cost of capital is as high as it's been in decades in terms of the interest rates. So this isn't a time for companies to actually extend themselves out there and build it. So you have this government assistance coming in. You have Tesla that already has this network, and you've got Ford with a very low install base of EVs. So I think the bet here is Tesla can build charging stations more efficiently than anyone else. The government knows this, and they already have. They can build charging stations faster than Ford basically can ramp EV, given their limitations over the next, call it 1 to 2 years in supply. So I think that's the bet, and I think others will have to follow. Otherwise, they're going to have to make this capital investment so that people want to go out and buy their cars, and as Alexander says, use their miserable charging solution, which really is a non-starter.
Yeah, we've heard Tesla explain before that they see Supercharger must stand as its own business on its own business merits. But I don't think that there's going to be royalties. I think that even just a partnership with Ford customers using the Superchargers, there's already revenue coming into Tesla that's going to afford them to be able to build more Superchargers and make profit out of it. But I think that Tesla is doing this because they want the APIs into the Ford app. And you heard Elon say twice to him, to the Ford CEO, we can do more than just this partnership. We can do software, and they're going to expand into that. That's just why they're doing this. There's going to be software inside Tesla, inside all the car manufacturers, and this is going to be just the first step. And so I think that's a bigger play than some sort of royalty. I would forego the royalty with Ford and any other OEMs, still making money, but once you get your hooks in there, it's so easy to then expand it. And how Apple CarPlay is inside all these guys, it's going to be Tesla CarPlay, right?
But don't they own the plug? Sorry, go ahead, Alexander.
They do. And why did I get to the royalty is when you listen to Jim Farley, he said, this is not a thing we just decided. Now, this has been a long, long negotiation. If this would have been royalty free and just a matter that each Ford driver can either opt for a monthly subscription and Tesla normal prices or no monthly subscription higher thing, what do you need to discuss this for months and months?
What they discussed was Tesla basically agreeing to not have to use the Tesla app. They're agreeing that Ford customers can use the Ford app. That was a non-starter for Ford. They had to use the Ford app, and then Tesla decided, okay, we're going to let that go. There's more than that's. I think the standoff.
So explain that to me. So because I mean, us who drive Teslas, we obviously know what happens. We have the Tesla app. We drive to the Supercharger. There's nothing else to do than plug in. You don't need to identify yourself whatsoever. The charger knows that this is your car. Everything is absolutely automized as much as it is. So the Ford app will have all these information.
It will have the map. It will have the map. I just showed a new software that Tesla updated for us, where you can actually, as you search for your Supercharger you're headed to, you can actually see the video and images of the Supercharger you're going to. It obviously tells you which of the Supercharger lanes are open and which aren't, how fast they run. All of that needs to be embedded into the Ford app. And then can Tesla advertise within that? Do they have to remove their brand? But for them to have agreed to let the Ford customers use the Ford app instead of the Tesla app, that was a big deal. And so there's more to it.
For free? No way. No way.
Yeah, maybe you're right.
No way. And as a shareholder, I wouldn't want that. As a shareholder and as a Tesla driver who now suddenly has 100,000 Ford cars using my Superchargers as well, I'm going to say the dirty word that nobody wants to say. I don't want that for free. I don't. I want them to monetize this in a substantial way, because I love that EV adoption gets out, and I love that there's a partnership, and that I think in the long run, Tesla powered software will end up in Ford cars, right? That's obviously the whole goal that we all wish is going to happen. But if they gave that away without royalty, just for the sake of expansion, I think that's a bit naive.
Yeah, it makes me think about how, like, Tesla owns the plug. So other devices, Apple, whoever, right? They're not going to let you make a charging cable or whatever without some kind of kickback. But correct me if I'm wrong, and we got people that know about this stuff. And then, but what are the implications? You have Ford now working with Tesla, And what happens when FSD is solved? Were they going to design their own and put in cameras of their own, or are they going to go to Tesla and say, "Hey, go ahead and outfit our cars. Here's the here's the computer," and so is that the play?
And not for free, please.
No,
Not for free.
Not for free. Not for free.
Yeah, I don't think it's for free. I mean, there's always two sides to a deal. I think in this situation, what Ford is giving to their consumers is they're removing this point of friction, not only for their use of the vehicles, but even their purchase intent of like, should I even buy a Ford or not? Now I know when I'm buying a Ford, I get access to the Tesla Supercharger network. That's worth something. So my guess is what's happening to clean it up is there's some charge per kilowatt hour that a Tesla consumer will get plugging into that supercharger, and there's probably a charge plus some amount that a Ford customer would get. From a Ford perspective, they're probably passing it on to their consumer, and therefore, because they're not in this position where they just have boatloads of cash. Oh, here, Tesla, here's this upfront payment for giving us supercharger. I doubt that happened. We won't know until they actually publicly disclose it. But my guess would be the best thing for both sides would be a per kilowatt hour additional fee for Ford consumers that gets passed along back to Tesla.
I have some information there. Yeah, I have some information that, and this one I'm ready to actually put a bet on. So the information is that there will be two ways of charging. The consumer, the Ford driver has a choice between, I think it was a $13 per month subscription, which makes sense only if they do a supercharging and then they get the normal Tesla prices, or it will be an additional price, added on the typical thing. So if you're just an occasional supercharger user, you'll go for option B. If you're using it all the time, you're going to go for option A. So that's one thing. But I'm prepared to bet that sooner or later we will know that there was an entry fee or a license fee. I don't know whether it's an upfront entry fee to get there or whether it's an ongoing fee that is probably scaled then by numbers of cars in North America that I keep with this charger. So let's say if it's 100,000 Fords, it's going to be that amount, or if it's 500,000 Ford EVs, it's another amount. But I'm ready to take that bet, even if I have to resubscribe to Earth for the rest of my life. No, I'm not.
I wouldn't dismiss that. I wouldn't dismiss
I'm so
that.
tempted, but I think you're probably right. I do think
that's between you and Herbert.
I know. I think that there's probably a license. I know that Ford is probably paying them a license, but I'm just thinking about if I was Tesla, I could get a little bit of a license, sure. But there's benefits to both parties. The benefit to Tesla is, it's done, right? I've got the supercharger network as the standard. I'm going to get all the other OEMs falling in line. This money from these guys is going to build more superchargers, and it's my foot in the door for building all sorts of other things that I can make money on. But yeah, I mean, obviously it does make sense.
I have a last one.
Yeah, I'm not ready to make that bet. It's probably very likely that they had to pay, Ford had to pay some sort of license fee. I'm sure.
Because you don't want to subscribe to Earl for lifetime.
I do not want to subscribe to Earl.
Okay. So I have another thing. Does any of you believe that there will be a traditional looking truck by Tesla? Hear me out. No. This is Gary always coming up with that. I think actually this whole partnership killed that idea. I mean, Ford has a couple of good trucks, right? They have 150 already. The Bronco, I think, is actually a nicer car, but whatever. So, and I do believe, and I heard that in the Tesla community, there are some people who love some of the Ford trucks. And the one thing that was always, I'm not going to go to Ford because of the charging. And I think this supercharger network, if somebody doesn't like the Cybertruck, makes suddenly these Ford trucks and future Ford EV trucks an attractive alternative, and then takes the dent out of this dream of some of us that Tesla needs a more conventional looking truck. Am I correct on that one?
I don't think you need to address like Tesla's not going to sell every single vehicle imaginable and try to sell all the cars. Like Tesla's not trying to kill every other competitor. I think what this is doing is just allowing the consumer to choose whatever they like. If you like the classic, boring 5,000 button truck, then go for Ford. And now charging is if when you're on road trips, right? That's really what we're talking about, is charging on road trips or densely populated areas where you don't have a house. But they don't need to, right? Let everyone else make the standard stuff. But again, I think this is future talk. What's going to happen is maybe Tesla will just sell their skateboards, or they will provide parts of the vehicle that they have an advantage on, where it's silly for Ford to try to pivot their entire business from regular cars to EVs, and then at the same time make chips and make everything involved with autonomy.
So let's stay with that idea, because I think that you're actually onto something, Sander. So what are the Tesla best car pieces that should make the skateboard for it to be personalized by other providers, right? Is it the batteries? Is it the casting? Is it the cameras? Is it the software? And what else is left, right? Because that's why I'm always trying to get to, because there's not much left that's not highest standard.
So, Tesla moving to the third gen platform, and it's going to be modular in design. It's going to be the unboxing process. And if you believe that the next gen platform is going to be based on the 3 and Y, or do you think it's going to be based on the Cybertruck? And I think it's going to be based on the Cybertruck platform. And what's going to happen is you're going to be able to have a modular design where you can have the platform, and then you can make it a 2-person car, a 6-person car, a van, and maybe you can have your truck that looks more like a normal truck. I really don't think they're going to do that, but that's how you do it. And if you go in this route, right, then you can partner with OEMs who decide to put their own look and feel to it, but you're selling basically the kind of the whole infrastructure in between, the skateboard that we're talking about.
And that's why I want to push, because I also think that actually the whole camera and software is going to be part of what they sell, and that's why the charging and FSD and everything will actually be one package. And this was the first step in that direction.
Except that
I have a prediction.
It's asked him a couple times that think about software.
Go ahead, Jeff. And then we're gonna bet.
Ford will attempt to license the knob that's in the middle of the touchscreen, and nobody will buy it.
What?
Yeah. We believe you. Definitely believe
The market research will tell them don't do it.
That's my prediction. They have a knob in the middle of the touchscreen.
On the screen.
Yeah, and nobody will buy it.
Hilarious, guys. Oh, that's fun. Okay, well, maybe we can have more of this kind of discussion next time. But we've spent a lot of time here. Great discussion. Tesla is an AI company. We're going to hear more about that in the next month. Mark my words. Thanks, everybody. Appreciate your time. Bye.
Thank you.